Yo, what is up? Gonna be doing some backtesting journaling in this one because I have a few trades from the last video. I need to catch up on the journaling, and I'm taking a small pause on the backtesting this week, shifting my focus into other areas of improvement of my life. For the short term being, before I go on a trip, just got some things I want to wrap up, but yeah, that including in that is to log all these backtested trades. So might as well just make a video logging them right here, showing how I journal my backtested trades. We had 2 trades on Solana, 1 on Bitcoin, and then 2 on XRP. One of those being one that I missed and only saw it develop, and only realized I missed it after the fact because I was locked in and focused on the Bitcoin and Sol accumulations, and there was a beautiful XRP accumulation that ended up playing out while the Bitcoin and Sol ones failed, so that's great. But yeah, so we're gonna be just journaling all these. I usually do this on 2 different monitors, so I'm just figuring out how I'm gonna make this work. Just switching between the journal and the chart for you guys to try to make it as clear as possible what's going on. But got some jazz playing in the background. I'm not sure if y'all can hear that. I think I like that. I'm gonna turn up a slight bit. Just some chill shit going on in the background, man. Gotta have a nice jazz playlist for when you're back testing or you're not doing it right. Alright, so first things first was that Solana trade. Just gonna pull that to the side, open up Solana. Open up Solana, it was this trade right here. Range starting points was with that accumulation into distribution. We had that compression with the first move, fake move right here, pop down, accumulation start as the starting point. It's a nice exhaustion coming into it. And at the same time, we had Bitcoin, potentially confirming an accumulation. But the accumulation on Bitcoin was a bit semi-counter context. So, that's the main reason I see this trade failing. I'm gonna hide all of this TA for the time being. Call that current, just to clean up the chart. Okay. Okay, so we had context being semi-pro. I'm just gonna paste all this into the journal in the tab to my right, and then I'm just gonna show as I type into the other ones. But so Bitcoin wasn't a confirmed accumulation, so it was pro, but it's pro locally, but on the higher time frame it was semi-counter. Semi-counter, high time frame, locally. So that should have been something that I outlined in here, but I did not. Semi-counter on the high time frame. Semi-counter on the high time frame with BTC being an accumulation pulled from first market structure pull after an extended move to upside, and then locally pro with Bitcoin being in a confirmed accumulation. And Solana was definitely on that semi-pro. First move, fake move, expectation with exhaustion coming into it. Just explain that, and then Bitcoin. Going over to Bitcoin here, you can see this was the trade on Bitcoin. So I'm gonna also label this as current and just throw it into a little folder right here, because we're also gonna be trading current, logging Bitcoin here. So this was the model we were looking at on Bitcoin. These are some high RR plays. Bitcoin was up 5.25 RR before correcting. The tough thing was there wasn't a clear reason to de-risk. Nice volume area there. There wasn't a clear reason to de-risk, except with that stop loss trail, where you can see we had that extended move to the upside, like this, where, you know, locally you kind of had this local exhaustion like this, and then this ended up being that first pull with a fairly large model close to that high. We're kind of like longing the pivot. You know, you could definitely get some deeper moves down, but it's not the worst thing in the world in general. Another issue with this Bitcoin accumulation was there's a lot of price action in this lower section, and I mentioned many times that I would have much rather seen an accumulation like this, sweeping this low once more due to this, you know, price action in the lower section and kind of a gap up here, which could act as a nice volume inefficiency just to get filled. So definitely would say it's a valid trade to take there, but yeah, there's some room for error in it. Okay. Okay, the duration being $11 days, 8 hours. Room for error here was a potential fake supply created on weekly open, manipulated, pushed down. Third tap POI had potential room for error, but was still solid. So we're gonna analyze those two. So the supply created as a potential first move fake move was right here, where we had that weekend push down, pop down into the third tap POI that, you know, right on that weekly open, the third tap was put in. So we're viewing this move down as manipulation, but there was still some supply created within that move down. And you can see how that supply was also backed by volume area low, and that supply ended up being the place where price rejected. Again, didn't really have a clear place to de-risk here. No, you know, distribution. We didn't sweep that high, so there's no distribution to either hedge or de-risk upon, which was a bit unfortunate, but you know, that's what it is. We also had okay. So yep, got that. Much cleaner like that. And then the room for error within that third tap POI looked like this, where we had one low that mitigated extreme demand, and then a high low directly after it that we came and swept, front running the low that mitigated the extreme demand. So ideally we just sweep both just to not have that room for error at all. But this room for error actually played into a second entry that we took upon this accumulation confirmation here locally that never made it to the technical target for us to de-risk. Checking real quick what this gold alert was about. Looks like gold is pushing lower. Okay. And we can see that this third tap did end up providing a meaningful reversal, so maybe this had to do with it. Not a very common situation. Usually it's better to, treat the third tap POI like this and ignore this one when it was the extreme liquidity that got swept, not the extreme demand mitigation, but you can still use it. It's still valid. Okay, so zooming out, we can screenshot this model and put it in the notes, highlighting our time of entry. We can see there was also a nice Asia on Monday that provided the push down and then squeeze up, so that was really clean. So just filling in some information on my other screen, and then I'll pull it over. I can just pull it over now, I guess. I don't got much more I need to copy. So Monday, 22nd May. May at 6 p.m. And my return was -1. Edge's return was also -1%. Did not miss the entry. Ejected from supply back to volume very low, even though the zone was small. Although context was good for move up here, BTC being in semi-counter location and wanting to go lower brought so down with it at the first POI, clear POI for reversal. So that's gonna be my note that I take away from this guy. This was the next trade. It was upon this aggressive move down that we could view as session manipulation, with Asia pushing price down the entire session to sweep that room for error, where we took out the top, but we also came for that room for error POI that, you know, could have potentially been the reason for price to come back lower, just for that extra liquidity. And then we got this local model that we took with the 0.5 risk due to the extremely high RR and, you know, a bit riskier entry overall. And that ended up failing. So on the 24th of May at 104, looking to see where Bitcoin was located. Bitcoin being located at the extreme demand. Also, you know, showing similar signs of, you know, aggressive move down, signs of accumulation within that demand on that Asia session. So, you know, London maybe could have put in just an aggressive reversal, where instead pre-New York, probably on maybe some news, don't price lower there. So pretty similar context to that last one. So we're just gonna copy the context over. So I'm going to call the room for error on this one the aggressive push into the third top POI that didn't necessarily need to, that price didn't necessarily need to come back for, since it was a potential liquidity low that had mitigated chain demand, had potential to de-risk at local technical target though. I would say a takeaway from this is that you don't want to get trapped into trading every break of structure around model 2 or third tap unless there was a clear reason price may have wanted to come back lower again. Because this didn't have a super clear reason why price would have wanted to come all the way back for that. So it's like, was it really necessary for them to have a manipulated push down just for that? You know, pretty mediocre extra liquidity. You know what I mean? Not super necessary. Seeming like price may just want to go lower at that point. Yes, those are kind of my takeaways, but at the same time, I would say this was valid place to, you know, put 0.5 on, other than the fact that, like, did we really need to come back? That's honestly the key takeaway. Did we really need to come back for that? Just the fact that price one day, you know, aggressively come back for it. Like, did they really need the manipulated push just to come back for that? You know, it doesn't really make a whole lot of sense of why they doesn't. Yeah, so okay. Moving on to the Bitcoin trade there. Okay. I am curious how this one's gonna end up playing out. Like, are we gonna come for that prior to getting a reversal up? Are we gonna come a bit lower? Are we gonna reverse up from here? Where price simply just came lower before going higher? I think there was some kind of a small POI inside of there. What was the current? Yeah, there was an unmitigated portion. So I'm gonna be interested to see how that plays out. Okay, I'm gonna copy some of these things over. So yeah, although this was semi-counter, yeah, that's another good thing to note. Although this was semi-counter, we did have nice behavior forming the range with the local accumulation that played out prior to the range formation. Which can be a reason why a semi-counter model can be traded. And we are on an overall bullish trend that could, still have some more fuel to the upside. So it's not the worst semi-counter environment. And then, for confluence, this is the there's no confluence for Bitcoin because it is the major. Duration of this guy was 27 days. The room for error. Trap zone created on a weekly push into the test POI. Weekly push and test POI. Some room for error in the third tap POI also could want to come deeper before continuing with bullish trend. So yeah, and that was the manipulated push with the Asia push down with the London break, with the pre-London break. So that's fine. We got Sunday, so we have that weekly open. This was that weekly open pushed down with pre-London confirming the model, so that's pretty clean. At 9 p.m. Just journaling these losses down. Take that photo. So that is maybe, we want to say that this, should have been trailed. I'm gonna dive into that in a second. Let me throw the screenshot here. Okay. It is kind of like by the time you're up here in this entire region, you have new demand creations. But when you see price dumping this aggressively down, you don't want to see it push below the demand. It's looking bad. And then that could be a time to trail when you did get the demand. Oh, you did have this. So there definitely was an opportunity to trail, but there was also an opportunity for, price to want to come for a POI lower. It's just the way that we came for that POI, it does not look good. So, when you come all the way down and you close like this, price is looking like it's failing the model. And you preferably don't want to see price lose that, but I guess it always could. Just like, that wouldn't be the worst thing in the world. It just is getting very extended, and then Yeah, getting very extended by that point. You kind of had like a compression right here. Where this was the first move, fake move before reversing it. Low key. So yeah, definitely want to be aware of that kind of thing developing. Where like this candle confirmed that first move, fake move. Honestly, you got to pop up, and then when you came back down, you close this candle way down here. That's like, okay, that's now looking like a first move, fake move. And we can get the rotation down now. And we were already saying we prefer to sweep it as well. So yeah, for that reason, with the new demand creation, the move up, I have to say it would have been valid to trail there. Upon seeing that, just yeah, trail your stop. Go where this go. Stop loss break even. So that's interesting though. Price was having a compression when it broke structure at your entry. So that's what we're gonna call that. We're gonna say that that was de-riskable, because it was. We had that compression where we popped out. It was starting to get rangy and dragged out below the top one deviation. As you can see, we had a lot of ranging price action. You know, we can even just pull it here. Like that, in that lower section of the range. Which can make for a nice volume and efficiency. But it can also just start to look like two different ranges where you have clear range, clear range. So yeah. When you're in that environment where you preferably have price. Pull this over so I can see. So yeah, when price is doing this instead of doing this, because I got the screenshot there in the lowest section when you would prefer move lower for due to semi-counter context, it can be riskier, to be more likely for that to happen. it's something to be aware of for sure. Gonna keep my eye out for that happening again. A lot of the point of what I'm doing with this journaling is, taking note of patterns and things like that I notice, so that going forward I can keep looking for them. It's not like that's the end all be, like I'm never going to take a trade that does this again, but it's like if I have a semi-counter context range, I prefer for this main low to get swept, and we're getting a lot of ranging price action in this lower section. We're going to see maybe it does come down and form an accumulation right here, and I'm like, okay, yeah, this could have been the first signs that was going to happen due to the context, and then maybe I see that happen more and more times in the future on other pairs now that I've kind of started to identify that in line with the context, and then we can be more cautious when taking models that develop in that fashion. So we currently have this, but I'd prefer just for this. So that's how we're going to illustrate it. Okay. Just pre-planning for next time when, really. Okay. XRP next. So, funnily enough, we were in a short on XRP from here, and that was in really nice profits while we were taking those longs on Solana and Bitcoin, and the longs on Solana and Bitcoin both failed, and we get a long confirmation on XRP right here. So I did not take this trade because I wasn't really aware of it developing. I didn't have it labeled on the charts. Should have taken my time more analyzing it, but live and you learn. Do I have a mistrade tab on here? Mistrade, yeah. Just hide that for now. Yeah, it's pretty damn clean. What do we have here? That New York session manipulation. Pushing price down right on the open of the session. Sweeping the extreme liquidity. Great return to zone. As you get this ranging price action, this really starts to look more like the PS, which was something I definitely should have noticed. You can also kind of look at this as a distribution into an accumulation, where this was your distribution that just came down, leaving all this buy side liquidity into the completion of it. So maybe we can target up to this high. We are gonna see about that, and that can be a nice, then location to distribute here. If we then. So I would be curious to see how that plays out. So yeah, this was the missed trade on XRP. You can see that clean bottom formation on the 10-minute there. Entry happening right there. Let's see where Bitcoin is at on the 25th of May at 25th was May at 10:30, where then Bitcoin was located. Bitcoin is located right here, showing some sort of a local pivot. Yeah, these aren't their best, but extreme demand mitigation. We put an equal highs there too. Nice liquidity to target up for. Nice local pivot. Because the thing is this XRP model. 3 days, 18 hours in duration. Three days, 18 hours in duration. $10:30 a.m. on Thursday. For 7.27. The overall context on XRP was we were kind of in this rounding up bottom with just straight liquidity above us, coming to the completion of this distribution technical target with, you know, some nice exhaustion. And some nice deviations. After sweeping a key POI. It's kind of similar to the Bitcoin context, but just on a much lower time frame and yeah, kind of locally here. But it played out and Bitcoin didn't. Maybe Bitcoin is intended to play out. It just is going to do something like this first. Yeah, it's interesting. It's like the previous local pivot here was Friday the 19th. I think it's like probably right here. Bitcoin's kind of having a fairly aggressive expansion to the downside. Like, it's truly not like the cleanest context, but you are coming into a potential third tap. So locally, you know, Bitcoin could get that completion. Or Bitcoin could locally get a move up coming into this demand, seeing this, you know, bottoming formation. Yeah, it's hard to really label that context. You can kind of call it semi-pro though. You know, you're seeing some sort of a downtrend here. Locally there. You're kind of, you know, creating some sort of a pivot. Coming into a third tap POI for a potential accumulation. Aggressive move inside of a compression. Would have been much nicer just to sweep that low. If we'd swept that low, then it's super clear. The fact that you front run the low makes it a bit more difficult to want to trade this. Although it is you could have just used it as a hedge for this guy. So I'm gonna call this context as a semi-pro slow move down to technical target of distribution in a bullish trend. And then, you know, you really had that clear ranging environment established when you front ran the technical target, and then you build all this liquidity coming down super slow. And then, yeah. And then the confluence is semi-pro. I'll say semi-pro, but coming down coming down aggressively and not sweeping optimal POI, but still in some sort of POI with local pivot formation. The room for error says iffier context on BTC. Iffy context on BTC. Session manipulation POI. Is there anything else? No, not really seeing anything else. That was a clean completion. I think I wrote a lot of learnings in this guy. Yeah, I'm gonna journal this guy once we see how it plays out. I'll just say it's that common price action of price coming super slow and extended to a technical target of distribution making distribution return to zone look steep in comparison to the new accumulation range / return to zone. Yeah, it's definitely that price action where you have that steeper looking return to zone here. Especially if I were to draw the return to zone from here. Super steep looking. But even from here, you have that return to zone, and then you can see this one's even more extended than that one. And you can see the clear distributive price action on the lows, where you just take the low, take the low. Yeah, we had that on ETH. That was a nice trade. But yeah, this is gonna be the video. Appreciate you guys for watching. Sorry it was so fucking long.